Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Hi there. Welcome to Talking Real Money. I'm Don McDonald. Tom's over there, even though you can't see him because this is an audio podcast today. Oh. Tomorrow we'll do video.
I look so nice. I look so nice today, too.
I know. Right. But today's just audio. We're just going to talk. Okay. We'll talk. You listen if you want. You don't have to. It's a podcast. You can do whatever the heck you want. It's a free country.
But today we want to say.
Yeah, used to be anyway. Today we want to talk about the brokers and insurance agents and people who hold themselves out to be financial advisors, and the fact that they should be grateful it is a free country. For them, it's free to really pretty much lie to you about a product that we take to task regularly, but we have to address it right now because it is a giant elephant sitting in the middle of the financial room because the stock market has misbehaved of late. And what happens when the stock market misbehaves?
Everybody wants the guarantee, Don, but listen to this headline. Listen to this headline. In uncertain times, do annuities make sense? Now, remind me the last time that times were not uncertain, that the future was, well, it's headed up and it will continue.
No.
Every time is uncertain. Come on. I mean,
there is no such thing as future certainty. There is future comfort because you're guessing it's going to be better.
Yeah, we all want to think that I'm on a straight line and it's heading up and to the right, but so ridiculous. So what's happening?
What is happening with investors? What are they doing?
Well, I mean, so what's happening is, guess what? People are buying and literally like hotcakes. Listen to these numbers. It's the greatest sales binge ever, thanks to the market, of various, and they call them registered index-linked annuities. That takes in like a lot of these equity index annuities, et cetera, right? Mm-hmm. Guess what? $288 billion is the estimate for annuity sales this year. That will be the greatest amount ever, eclipsing the troubling year 2008. Now, if you're old enough to remember how difficult...
Of course we are.
Was that like 14 years? Is that true? 14 years ago? I was shocked when I was like, wow, that went by fast. Anyway, and why are people buying these type of annuities like hotcakes? Well, at least one advisor.
I know why. Yeah.
Yeah. One advisor's honest enough to say. One advisor's on enough to say it's a fear trade. Fear trade, right? I mean, not a fair trade, a fear trade, because people want to think their money's never going to move around much, but they're going to make money on their money, but it's never going to go down, and that's why they're buying these. Well, we call them equity index annuities, but they fall under many names, et cetera, et cetera. And so these are viewed as an investment and also some sort of quasi pension plan, right? I'm going to get a guaranteed payout, and I'm not going to have to worry about the market. I'm going to be insulated from its volatility. But again, the same advisor points out correctly, Don, there's no free lunch. And then also points out later, and this is where we're in a complete agreement, these are from a couple of industry magazines, by the way. So if you haven't seen these articles, that's why. This advisor, who should get a lot of praise, says, long-term, I think the math is in favor of a diversified portfolio of bonds, equities, and real estate. But for some people, they can't stomach it.
But if he was totally honest, he would say, yeah, but then he would add, and yet these indexed annuity products are a great way for me to make a lot of money off my clients right away instead of waiting for years to make it slowly.
Well, no, this guy doesn't sell them.
Oh,
This guy
okay.
doesn't
He's not
sell
a
them.
seller guy.
So they
Well,
got
then
him
no
the
wonder he's
contrarian point of view.
honest.
Yeah, he doesn't.
It's the people who sell them who lie and blatantly obfuscate. As a matter of fact, recently, here in my little Florida town, a couple, a very well-respected, highly religious couple, she's a singer, and they're starting their own insurance company, and they're going to specialize in these very safe annuities that give you the returns of the market. And they put up a chart that came from a particular insurance company that I looked up. And I've seen this chart at some of the Munch and Learns, free steak dinners.
This is how you would have done versus the S&P
Right.
500.
So they
by the
show
way,
you
they
this
don't
20
include dividends either,
Right.
by the way, ever.
They show you this 20-year chart from 2008 through 2018. Conveniently, they show you 2008 through 2018. I'm sorry, 2000 or 1998 through 2018, which gives you the lost decade in there. Gives you the lost decade. But they show you a chart of what they say is the S&P 500. And they show the growth of $100,000 over that time, and they show that their indexed annuity over 20 years with no risk of downturns at all ended up after 20 years making their clients more money than that scary S&P 500. However, their chart is horribly misleading. Horribly misleading. You see the two lines, and they write, but the S&P 500 is all over the place when they get to almost the same point, but the indexed annuity is a little higher. Why? Because they only used the actual number of the S&P 500, not the effects of dividends and the compounding of dividends.
It's not a fair comparison, even that aside.
Oh,
because think about how much. I mean, the risk. Setting all that aside for a moment, again, why are people buying $300 billion worth of equity index or index link, whatever term you want to use? Why are they buying them? Well, they're buying them. You're buying them because you're scared. You're scared right now because, as Don just said, the markets have had, a difficult time lately. That means I want that certainty. It's making me nervous, right? You're scared. Number two, you hear that word that you just said. It's never going to go down, and I'm getting a return of they still say the returns of the market.
Of the market, right, which is so misleading.
Yes, that is misleading. But here's the other one. Here's the other reason they're selling like hotcakes. Because they're selling them. Not very many people call you and sell you an index fund, right? Because, there's not a lot of money in that. Guess what? For these, as we've tried to point out over the years, the person selling $100,000 equity index annuity could make, $8,000. I mean, $8,000, a lot of money.
$9,000,
whatever it is,
$10,000
in an afternoon of work. I mean, that's a lot of money.
And their regulatory agencies allow them to actually lie. They're allowed to lie. There's no recourse against an insurance agent who says in an event, this will give you the return of the stock market with no risk, when the reality is this will give you a portion of the return of the stock market, and that portion is not much better than you're going to make on bonds. Oh, and by the way, don't ask them what the commission is, because they'll also lie about that. Oh, you don't pay me a commission. The insurance company pays me for selling these.
Always my favorite. So again, but you're listening right now and you're saying, yeah, but we're in a bear market. I don't want my portfolio to be down 20%. Well, first of all, how many of you have 100% equity portfolios? Not many. And
how many of those are 100% in the S&P 500?
Yeah, thank you. Because the global portfolio is down about 12% year to date. Setting all that aside just for a moment, let's just assume there is a product that gets you the return of the market with no risk. Well, I'm going to take that. I'll take that. I want certainty in my life. I want to drive down the road and not be nervous.
Are you trying to use common sense again?
I hate that, right? Yeah,
Would
but
you
still.
stop trying to be sensible?
It's those people that say, "Well, I put in a thing that makes me an easy 6% a year with no risk." And I think if there were such a thing, there would be no stock market because, well, we give all our clients money to them too because just give me that 6%. I'm guaranteed. It doesn't exist. And so this is you listening, you buying that, wants the cake and eating it too. There is no product like that. There is no wealth without risk. You have to accept volatility. You accept risk, and we'll talk more about this in an upcoming program. You accept risk in your regular life. Yeah, in tomorrow's program. In many ways, every single day that you don't acknowledge. So risk exists, and do you have to live with it? Yes. Is there some uncertainty that's attached to investing in stocks and bonds? Absolutely. That's created the growth. That's where the rise comes in value. So these truly, and I'll say it, these are truly awful products. They are completely misleading. And they're going to say they're free, by the way, too, which is also nonsense because we've pulled them apart enough to know that they're making a lot of money on this in a variety of ways.
As a matter of fact, if you'd like to know about what they make, approximately what they make, ask them what the year one surrender charge is. That is a good, maybe not exactly, it's within 1 or 2% of the actual commission that they are paid. So if you see a 10% or a 9% surrender charge, odds are pretty good that that's about how much you're paying in fees.
So my suggestion here is, number one, if anybody who claims they're fiduciary sells you this, they can't be a fiduciary because they're collecting commission. How can you do that? Number two, don't believe the silly claims that are made because when you read in, Don wrote an article on this a few years ago. When you actually pull all these apart, they are not at all creating the growth that they promise they're not getting you stock market-like returns with no risk. That is utter and complete nonsense. So stay away. And insurance agents,
as they say,
back off.
In the old country, that's malarkey. That's a bunch of malarkey.
We can say that, so sure.
We can say malarkey. I will come right out and say these people are dishonest. I believe them to be dishonest. I truly believe you cannot honestly and responsibly sell anyone anywhere this product without telling them that the actual returns will be far lower than the stock market has provided in the past, and that I'm making a hell of a lot of money. I hate that they don't have to disclose their commissions. I hate that. Everybody else in the financial industry has to disclose this. They don't disclose it. It's nowhere in the disclosure documents.
Transparency is important in all things.
Horrible industry.
Yeah.
The insurance industry is so badly regulated. It is so that the odds are stacked against you as a client, and they like it that way. Got a question for you, Tom. This was sent in to talkingrealmoney.com.
Okay.
And it is about a gentleman who claims to have a financial mess.
Uh-oh.
Hey, Tom and Don, love the show as I listen to it daily. Need help with the mess I've created for myself. I've been a good saver. Currently, I have an extra $6,000 a month that I've been putting in the market after accounting for 401k and backdoor IRA contributions during my life. But I've also made a little bit of a mess with my personal finances of late. I'm 43 years old, married, 2 kids. I have always saved money, but it has not been saving money the way but I have not been saving money the way I should. Okay, there, I got it. In the past, I put a lot of money in cash.
It's okay. Yeah.
I've been putting a lot of money in cash because I was fearful of losing it as I was building it up. Around the middle of 2021.
Let's see. One year ago.
This is so typical. Yeah. Around the middle of 2021, and I'm going to add this one word. I finally started loading up in the stock market. I decided to put all my chips in the market in 2021, finally.
Yeah.
Every week I put money in the market through my 401k, then my brokerage account the next week. I was investing every week in the market.
And then?
As you know, the market has plummeted. I've literally been buying high since I started heavily investing in June of last year. Everything I've invested is down considerably. Most of my money is in index funds, but I do have some blue chip growth funds and some small and medium tech phones that I invest in that have been absolutely brutalized. I'm having buyer's remorse. But I'm not looking at my account online because I don't want to make the same mistake I've made in the past when I've tried to time the market. Being I bought in high and I'm struggling with continuing to invest in the market weekly, I still have a lot of cash that I can put to work for me, but I'm hesitant. My biggest issue is the fact that I put a large amount of cash in the market and it's now down over 35% in the last month. 9 months, I'm sorry. But I'm really, not 35%?
Must all
I'm really
be
struggling
in,
with
tech or something. Yeah.
remorse.
Or Bitcoin.
Oh, sir. Russ.
What's the
Russ.
question?
Russ.
What's the question? Should I
I'm
sell
struggling
everything?
with buyer's remorse. Any help would be appreciated. He wants to know what he should do now. And you know,
remorse.
Russ, you know what you should do now. You're basically you're arguing with yourself over what's right and what's emotionally stupid.
Buyer's
Am I
remorse.
right?
I mean, you could ask any person who got into a relationship with me if they don't have buyer's remorse after about 6 months of our relationship. Everybody has buyer's remorse over something in their life, right? I mean, that comes with anyway.
Well, and that isn't even the point. The point is you've been doing it so badly for so long. You've been making all the mistakes in the book, and now all of a sudden you want to make the same mistake again?
And if you have
Did
cash,
you learn nothing?
Wouldn't you want to buy after something's gone? Frankly, I wish I had cash today because I love to buy stuff on sale. Okay, number one, you're 43 years old. It's not like you're 83. It's not like you're living off the money for some long period of time. So anything that's happened in the last year, who cares? Number two, Don correctly points out, you're having this internal debate, this internal struggle, like, well, did I make a good decision? Yeah, you made a great decision. Now, I don't know all the things you're invested in, because if you're down 35%, my friend, I'd have to look at the portfolio to see what you're in that's down that way, because I'm not aware of very many assets. Well, okay, yeah, Bitcoin at all are down more than that. But at any rate, if you're properly diversified using index funds the way you said, you're doing exactly the right. You should be throwing all that money, keep throwing it in there. What's going to happen? Well, over time, you're going to be buying during a downturn, which is exactly what you want to do. Buy low, sell high. So you're overthinking this. We know, by the way, we've said this before. It's readily public information. Those people that sell now end up with less money. You just do. You're selling low, and then when are you going to buy back in, or are you going to buy back? You just end up with less. So, no, this is not a time to sell. I'm sorry you're having this internal struggle with yourself, but put your big boy pants on and get back to it, is my take.
Wow, he's far more. Why did my mic suddenly change? This is really weird.
It sounds fine.
All right, well, then that's good. We're going to go with that. Here's the thing. Why are you thinking about doing something now when you know from years past that you're waiting? You waiting was detrimental to you. You waited and you waited for a decade. And then you finally go, oh, great, the market's been way up. I better get in. Now that it's gone way down, you think you might want to get out? You got cash sitting around? If I had any cash sitting around right now, any extra cash that I hadn't already invested, I would dump it into the market. But the first thing you need to do, Russ, is listen to tomorrow's episode, but go take our risk quiz, determine your risk tolerance, build the right portfolio, quit trying to pick the hot stuff, give it up forever. Just diversify.
I think that's exactly right. You should know what your stock to bond ratio should be, and it should be very aggressive in your early 40s. Once you've established that, crises come along, wars come along, whatever, all of it comes along, it does not matter to you. You have a plan. People that sort of go willy-nilly one way or the other, depending on which way the wind is blowing, again, that will be painful to your overall holdings when it is important in 20 years that you've grown the money rather than sitting on the sideline waiting for something, waiting for uncertain times to go away. I still love that.
Yeah,
uncertain times. Times are always uncertain. Get over it.
And
Uncertain
give us a
times.
call at 855-935-TALK, 855-935-8255. And we'll try and help you with your money problems. If you need bigger help, go to Vestory.com, set up an appointment with one of our advisors. They'd be glad to help you. No cost, no obligation, no high-pressure sales pitch. I'm Don. Tom's over there, and we're glad you're there. We're talking real money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial product or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.